real estate, private credit, Treasuries. These aren't just Wall Street's playground anymore, they're going on-chain and it's happening faster than anyone expected. The RWA market has exploded to over $22 billion, and that's just the beginning. BlackRock is in, JP Morgan is in. The world's biggest institutions are tokenizing everything. The question is, are you paying attention? Welcome back to BlockThink. In this video, we're diving into RWAs, real-world assets, one of the fastest growing sectors in crypto. RWAs are exactly what they sound like. Physical and financial assets like real estate, US Treasuries, even art and commodities, tokenized and traded on public blockchains. This transformation is powered by three forces converging. Regulatory clarity in over 80% of major markets, deep institutional capital flowing in from firms like BlackRock and JP Morgan, and a wave of purpose-built blockchain infrastructure finally ready for prime time. In this video, we'll break down how the RWA market went from $5 billion to over $22 billion in just 2 years. We'll look at the platforms driving it, the tech enabling it, how DeFi is evolving around it, and why RWAs might be the bridge between TradFi and the decentralized future. So, let's get into those numbers. As of May 2025, the market for tokenized real-world assets has surged past $22 billion. That's not just growth, it's a tidal wave. Month over month, we're seeing double-digit increases in market cap, driven by both institutional money and the rapid development of new tokenized asset classes. And we're still early. Forecasts for 2030, between $5 trillion and $16 trillion. That's the scale we're talking about. This isn't niche anymore. This is global capital migrating on-chain. BlackRock's already there. Their Biddle fund on Ethereum alone manages $2.5 billion, accounting for 41% of all tokenized US Treasuries. And they're not alone. JP Morgan is piloting tokenized collateral settlements. Ondo Finance, Propi, and Centrifuge are launching innovative products at breakneck speed, bringing everything from real estate to private credit onto blockchain rails. And it's not just about wrapping old assets in new tech. It's about unlocking entirely new markets, increasing liquidity, and reducing friction for both issuers and investors. In short, RWAs are setting the foundation for the next generation of finance. Behind every RWA token isn't just an asset, it's infrastructure, compliance, and trust. And that foundation is growing stronger than ever. Over 80% of major jurisdictions now have clear regulations for digital assets and tokenization. From Argentina's sandbox initiatives to the EU's MiCA framework, global regulators are finally drawing the map, turning grey zones into green lights. But it's not just about laws, it's about the rails. Ethereum still leads the pack, securing over half of all tokenized assets. But specialized platforms are on the rise. Solana is scaling fast with 24/7 global trading, while purpose-built chains like Polymesh, STO Chain, and Redbelly offer compliance-first ecosystems tailored for RWAs. Oracles like DIA's XReal are solving the last-mile problem, bringing live pricing data for hundreds of asset classes on-chain. And with tens of millions in grant funding from projects like Cadena, developers are building everything from DeFi integrations to legal compliance tools at scale. Powered by blockchain, the promise of DeFi has always been access, open, programmable finance for anyone with an internet connection. But until now, it's mostly been limited to native crypto assets. RWAs are changing that. Thanks to new token standards like Centrifuge's DRWA, institutional-grade assets can now be used directly in DeFi. We're talking US Treasuries, real estate-backed tokens, private credit, all usable as collateral, tradable on decentralized exchanges, and integrated into on-chain lending protocols. DeFi is evolving, and RWAs are the fuel. They're not just bridging the gap between crypto and the real world. They're making that bridge a two-way superhighway. Of course, it's not all smooth sailing. Despite explosive growth, RWAs still face major hurdles. Regulatory fragmentation is a constant friction. Different jurisdictions, different standards. Security and compliance are non-negotiables, and interoperability between blockchains remains an unsolved problem. Adoption is uneven, both geographically and across asset types. But the trend lines are clear. The infrastructure is being built, standards are forming, and both developers and institutions are pushing hard to close the gap. RWAs are no longer a what if, they're a what's next. The sector is maturing, the rails are live, and for the first time, we're seeing a legitimate on-chain alternative to traditional capital markets. Real-world assets are no longer emerging, they're here, tokenized, traded, and growing fast. From US Treasuries to real estate, from private credit to stablecoins, this is the latest example of how everything we know of the financial system will continue to move on-chain. And this time, it's not just for the crypto natives. Institutions are leading, regulators are aligning, and infrastructure is scaling. If you're watching this, you're early. The RWA market is set to reshape everything we know about asset ownership, liquidity, and access. Subscribe for more crypto insight, drop a comment with your favorite RWA asset, and hit like to support the on-chain movement. This is just the beginning.